Good morning. Welcome to IG's early morning call. It's Monday, the 23rd of October. Let's take a look at the headlines on this first trading day of the week. And it's a question of markets under pressure pretty much across the board. We're expecting a lower open to the trading day across the European equity markets in the session in today's trade, including London, actually, on the way down as we see oil down for a second day. Meanwhile, talking about the UK, rates continue to rise. We now have as of Friday's close, the UK 30-year gilt yield at the highest in a quarter of a century. What's this mean? Well, it means the upward pressure remains on the Bank of England to be extra vigilant. We may not necessarily get an interest rate rise next time around. I think this just indicates the harsh reality of the fact that interest rates across the curve continue to rise. Meanwhile, Moody's, the ratings agency, has raised the UK outlook recovering from that budget from Kwasi Kwarteng back in September last year. And we've seen earnings out this morning from a couple of companies, actually. Philips, the headlines, raising its full year outlook, third quarter earnings beat for the company. Let's take a look at what's happening in other areas of the market. We've got the volatility actually on the way down today. We've seen it spike up some 26% from the lows that we had just on the 12th of October. This move up that we've seen has been on the back of the concerns about what's been happening in the Gaza Strip, and also the fact that yields continue to rise across the curve in many countries, as we've just seen evidence of here in the UK. US 10-year Treasury yields solidifying its gains above 5%. And as of the high point on Friday, we saw the volatility tip into levels not seen since the 25th of May. A little bit down today, which means there is a little bit of interest in the markets. But I wanted to highlight this in the context of where we closed out Friday's session. Now, these are 30-minute candles on the London markets. This is the 4:30 close that we had at 45.15 or so, 70. I beg your pardon, I'll reread that again. 74.16, 74.15. We're 74.06 at the moment. A little bit of buying interest, as I said, in the recent sort of couple of hours or so. But to be frank with you, it's not enough, I don't think, necessarily to steer a higher start to the trading day. Looking on the one-day trade, you can see clearly the back end of last week, as we saw Wednesday, Thursday, Friday, really big losses on the 24-hour markets, not quite below the line of support on the FTSE 100. This market has remained relatively resilient. It's not got quite the same sort of curling over that we've seen in some other markets across Europe. But if we do get a break at the 73.68 level, you're then on the way down to 72.15. Now, if we see interest rates continue to rise across the curve, I suspect this could well put extra pressure on the Bank of England. We may well see further interest rate rises here in the UK. Now, we've got the European Central Bank this week, not expected to move on interest rates, but the German DAX on the way down in a really big way. In fact, you can see here, breaking of this line of support at 14,943 on Friday, taking us down at the close on the 24-hour markets to levels not seen intraday since the 20th of March this year. We have got a little bit of buying interest, not a massive amount. It's just a small retracement in what is otherwise a down market. Price target remaining down here at 14,458. It's the same sort of price action we got in the French markets. You can see there that we've got this move lower that we saw on Friday. Again, a little bit of buying interest on the overall picture. Just while we're talking about what's happening and how the markets are opening, I just wanted to update you as well on what's happening with sterling just very briefly. There's no other reason to talk about this other than the context of this news out from Moody's. The United Kingdom outlook has been moved up to stable from negative by Moody's. As I say, it's not really had much of an impact on the markets. As you can see, we saw just shortly ago with what's happening on the FTSE. The sterling market hasn't moved very much either, but nonetheless, it is a little bit of a recovery in terms of the sentiment for the UK economy since that budget we saw at the back end of last year with the previous Tory administration, when we saw that being led by Liz Truss. So that is now well in the past. Rearview mirror. We're looking ahead now. Moody's updating the outlook to stable from negative from the ratings agency. Now, let's take a look at what's been happening overnight in the Asia-Pacific markets. Losses across the board. We've got losses on Wall Street as well, as we'll see in just a few moments' time. But the bottom line is that we've got these markets on the way down on expectations that the interest rate picture will continue to see upward pressure. Let's take a look as well at what's been happening on the US markets, because as of the close on Friday, we saw losses across the board there as well, with the technology stocks, the growth stocks taking it on the chin. I want to show you the Dow first of all. in terms of the moves that we saw last week, like we saw in many of the markets, big losses towards the back end of last week, closing pretty much at the bottom of the candle on Friday for the Dow. A little bit of a gain in the 24-hour market. To be honest with you, it's not looking particularly hopeful. We've got a crossover on the MACD indicating potentially momentum picking up on the downside. And I think if we continue to see extra evidence that there's pressure building on these markets because of inflation, I think that itself will be a big negative possibly for these markets as we look into the rest of today's trade. 24-hour markets looking as though we could well see a little bit of a recovery on from the close on Friday, but to be honest with you, it's really not that much. Same sort of price action on the S&P 500, not too far away from this total retracement down to 4,200. I was talking to Oppenheimer's chief strategist on Friday. He was talking about a 4,900 print for the S&P 500 at some point by the end of the year. The market's got to go a long way before we get even to close to that level. But he's relatively still positive on the outlook. The big moves, though, that we've seen on the S&P 500 have really been driven by these tech stocks. Tech stocks really taking on the chin. Although, interestingly enough, not too far away from this line of support, I think, like the other markets, a little bit of a relief at the moment on the 24-hour markets. But the bottom line is, I fully expect this line of support to be broken. Where's the next line of support from the Nasdaq? Well, if the Nasdaq breaks the 14,440, candle close below there, you're on the way down to the 12,720. A little bit of support possibly at the 200-day moving average at around about the 14,000 level, just around about that sort of area of the market. But this is the next line of support, the lows that we had back in April this year. And that looks as though potentially that could well end up getting to that point with a break of that line of support sometime possibly in the next few days. We'll have to see how things move. One of the stocks to watch here in the UK is numbers out today from Vistory, the house builder, on third quarter trading update, the current trading and outlook. The company has said it's targeting an adjusted profit before tax of £450 million for the fiscal 2023. No change on prior forecasts, but woven into this is a £40 million cut in full year pre-tax profit due to a drop in margin. So it concedes that that 450 million will actually now be 410 million if this comes to pass with the degradation in margins. Why is there a degradation in margins? Well, as previously reported, the company said we saw a slowdown in the open market private sales during the summer months due to higher interest rates and inflationary cost pressures on household incomes. This trend, it says, has continued, and we've not seen the seasonal increase in private sales since September that we have been expected. So I'm taking this as a profit warning for the company. And when we look at where we are in terms of the move for Vistory, Vistory is the company that came out of the old Bovis Homes and Galliford Try's Linden Homes. Look at the direction of travel here. On the way down, Friday's close, we saw the lowest close that we've seen in this stock since the 29th of August, and I'm fully expecting a further drop. 725 is where we open. This is the line of support. The lows that we had back on the 21st of August at 689 pence, looking potentially for a drop at the start there for Vistory. Philips, the Dutch electronics giant, has reported its third quarter figures. Things looking good, actually, for the company. Earnings per share, 33 cents. We've been looking for 30 cents. Revenues, 4.47 billion euros. Estimates have been around about that sort of thing. But in fact, if you look at the figures themselves, positive cash flow coming through, comparable sales increasing by 11%. Operating cash flow improved to 489 million compared to an outflow of 180 million euros in the third quarter of last year. Restructuring and productivity plans on track with a total savings of 258 million euros in the quarter. And as a result of that, it's raised its full year outlook. This is the stock of Philips. This is not the lighting part of the business. This is the electronics company. 1742 is where we're opening this morning. If you're long on this, stock goes underneath this line down here to around about the 1650 level. So things looking good potentially there for Philips at the start. Now, I want to talk about one of the breaking news headlines and a company that, in fact, you can't trade on the IG platform, but there's reasons for that because it's a Taiwanese-based company. China has launched an investigation into the Apple iPhone maker Foxconn over tax and land use. Let's take a look into some more detail about what we've got here. Bloomberg is quoting Chinese state media when it says tax authorities inspected Foxconn sites in China, with Foxconn telling the authorities it would cooperate with the investigation. Now, all this coincides with Foxconn founder Terry Gu running as an independent candidate in Taiwan's presidential elections in January. The FT says that it's a contest that will significantly influence Taiwan's relationship with China and tensions in the Taiwan Strait. Now, Gao stepped down as chief executive 4 years ago and resigned his seat on the board in early September after announcing his presidential run. However, he retains a 12.5% stake in the company. Now, Beijing has said in the past it's targeted local subsidiaries of Taiwanese companies with regulatory probes, and the political pressure comes at a sensitive or tense times with the relationship with Taiwan. Chinese officials frequently urge Taiwanese companies to help promote peaceful development between the two sides. Now, I said you can't actually trade Foxconn, but I just want to show you Apple's chart. It's a good excuse to show you some of the declines we've seen in Apple shares. The thing about Apple is, of course, if there's a problem at Foxconn, and indeed we've seen this before, it just shifts some of its manufacturing abroad. And it's done this quite successfully, moving some of the Apple iPhone production into India. So that's a valve, if you like, that Apple can use if it senses that there's a problem with Foxconn. Apple, $172.95, trading below this red dotted line, which is the $3 trillion value of the company level. I'll update you as well on what's happening in a couple of other areas of the market. Just take a look briefly at the commodities markets. I want to go first of all with what's going on with oil. Oil down for a second day in today's session. Now, this move up that we've seen recently has concerned many about the influence oil has on overall inflation figures. So a little bit of relief will come as a relief to those watching inflation, but it doesn't stop the fact that oil prices are still at recent highs and is causing a problem for central banks. Just want to quickly run through some of the other markets. Gold now unchanged, pretty much unchanged on Friday's close at 1976. On Friday, we saw it ever so close to the 2000 level, 1997.3, not quite getting there before pulling back. And on the other markets, just want to quickly update you on what's happening on base metals. Pretty much all base metals, the same sort of shape of chart. Here we've got copper very close to this line of support at 78.66. You get a break of that, then on the way down to levels there not seen since the 4th of November. And then there's not much stopping it all the way down to 74.20, which is the next line of support. That's it from me. About 17 minutes to go before the start of today's European session. Still looking for losses across the board. In fact, more so on the European continental market, perhaps possibly maybe than London. But I think generally speaking, it's going to be a day when we're monitoring what's going on in terms of the outlook for yields and inflation, and also the developments in the Gaza.